Hi there, welcome to Kneppyinvests. Before we get into the meat of this video, just a few thoughts that are running my head right now, and it's in regards to videos I do after working 2 night shifts, which I am doing right now. This video has been prepared after working 2 night shifts, and typically when I work 2 night shifts, I am functioning on 5 hours sleep over the past 53 hours. And the thing that is puzzling to me is whenever I do these videos on 5 hours sleep over the past 53 hours, it seems like everything goes really seamlessly. But I'm wondering if that's because my standards and my expectations are quite a bit lower when I am working tired, or perhaps I do work significantly better when I am fatigued. So these are just thoughts that are going through my head right now. So if there is a bit of a decrease in quality in this video, maybe that's the reason, and I'm just not noticing it. Now we get to the meat of the video, and that is talking about a company I've never really looked at in the past. But it does fall in a subset of companies that I am willing to do a fair bit of research on. Now, the whole point of me doing this channel is to share ideas. And that's not including the other reason I'm doing this channel, a much more personal reason. But I really want to share ideas with other investors. And even though a lot of the ideas I do in this video, a lot of the companies I do feature in this company are companies I'm interested in, companies I do have a holding in, there's a whole group of other videos that I am willing to do videos on, or whole group of other companies that I am willing to do videos on because they fall within this unique subset of companies, and they are small companies that are growing and profitable. I don't know all of these companies, but I am willing to do research on these companies if they come across my lap. And that's what happened with Cosol, the company I'll be featuring in this video, because they had an AGM on the 18th of November, and I had a quick look at the AGM, and I noticed they are small, they are growing, and they are profitable. So hence the video today on a company I know very little about. As I started researching Cosol, the more and more I looked at what this company does, it seemed like the more and more confused I became. Cosol does fall into the IT solutions area, in particular in regards to enterprise asset management, EAM, and they are involved with asset intensive businesses. And when they talk about asset, I think they talk about data, not other sort of assets. So another way to call this business, or the area to describe this business, is around data solutions. Cosol was founded in 2000 and they listed on the ASX on the 24th of January 2020. Unfortunate timing there because that was about 1 month before we started to see the COVID-19 financial panic. The CEO of Cosol is Ben Buckley. He has a 2.2% holding in this company. And it's interesting, the two largest shareholders in Cosol are the chair and another non-executive director, G. Lewis, I think it's Jeffrey Lewis, and Shane or Sean Johnson. They have an identical holding in this company at 18.04%, or maybe it's 18.2% each. So there's definite skin in the game when it comes to Cosol, and that's something I am always looking for, because whenever you see skin in the game, particularly within a certain range, I think that range is between about 10 to 40%. That means the management of a company or the board of the company, their interests are aligned with shareholders. And these directors, these managers want this company to grow because they have a significant stake in the company. The market cap of Cosol is only $88 million. That's a share price of 67 cents. And because this company is growing and profitable, that's another reason I became interested in this company. And the ticker code for Cosol is COS. Now let's just have a closer look at what actually this company does, because I did have to actually have a look at quite a few of their presentations, had to go to their website to get my head across what they actually do. So let's talk about that now. This particular slide was from one of Cosol's presentations, and I won't say this was the ha-ha moment for me, but it did give me a bit of clarity around what this company does. Just mentions they are the largest Ellipse ABB enterprise software managed service provider in Asia, Pacific, and North America. So then I had to Google what Ellipse ABB enterprise software is. Something to do with Hitachi, something to do with how data is managed. And there are a lot of companies out there who have a lot of data that needs to be managed. And another part of this slide was breaking down Cosol into 3 segments. So we call these the verticals of this business: enterprise asset management services, enterprise data asset management services, and managed services. And it goes through the practices they do. So enterprise asset management, solutions and services, data and digital solutions, and service management. And this goes into more depth about what that means. So it looks like they do a lot of advisory services, advanced analytics, training, change management, migrations, artificial intelligence. So it seems like this company is doing a lot. And when you have a look at some of their clients, an impressive client list as well. So this particular slide that I did find in one of the presentations helped me a little bit to get my head around what this company does. But I still want to know a little bit more, because it seems like they are relying on a third-party enterprise software package from Hitachi. So the whole business is revolving around that. And if something happens to that enterprise software, whatever it is, then this company could be under threat. But I'm not sure if that's true or if it's not. That's something I would have to think about if I do more research on this company. Before I started doing research on what Cosol does, the first thing I usually do is look at the financial state of the company. I want to see if the company is growing, how large their revenue is, if they're operational cash flow positive, negative, profitable, those sort of things. And if I get a lot of ticks, no big red flags, then I'll continue on my research and try to figure out what the company does. Now, because this company listed on the ASX in January 2020, there was some odd accounting in regards to when you look at their financial report released in August. I'll talk about that later in this video. However, revenue has grown over the past year from about $20 million to $33.6 million. And now again, actually not again because I haven't mentioned this yet, Cosol have been doing some acquisitions, just like a lot of other companies on the ASX. And that's one way they have been growing revenue, but there is organic growth in there as well. And they are operational cash flow positive and they are profitable. Those are quite small at this point in time. Gross margins have increased from 22% to 26%. A little bit of net debt, not a lot. In fact, if you don't take into account something, they would be net cash. And that's something I completely forget right now. Enterprise value to operating cash flow, 44.7. That seems fairly high, way higher than what I would typically be looking for. So what numbers I'm looking for here, between roughly 10 and 20 for a growing business. Anything less than 10 would be a value play. Anything greater than 20, you are looking at a company that could be overvalued. But operating cash flow is on a low base at 1.9 million. And I could definitely see Cosol tripling or even doubling that operating cash flow in 1 year, which would significantly lower enterprise value to operating cash flow if the enterprise value stays at around $90 million. Price to sales ratio, not too stretched, only 2.6. I think the reason why net debt is 2 million instead of net cash is because of considerations in regards to acquisitions the company has made in the past. Whenever a company releases a financial report, like a full year, half year, the first statement I always go to is the cash flow statement, even though it's the last of the financial statements. And then I work my way backwards. In my opinion, this is just my opinion, the cash flow statement is the most important statement. Doesn't mean the other statements are not important, but just in my opinion, this is telling you how the company is performing in their operations, because one of the parts of the cash flow statement is cash flow from operating activities, and cash flow is very important for the survivability and the ongoing concern of a company. Now, one thing here, when you look at Cosol's financial cash flow statement or even the other financial statements, they're not comparing apples to apples because they're comparing 1 year, which was 12 months, to another period that was not 12 months. In fact, it went from the 7th of August 2019 to 30th of June 2020. So that's 5 weeks or 5 or 6 weeks short of a full year. Now, even though it's not really comparing apples to apples, there has been considerable growth when you look at cash receipts, increasing from 12.9 million to 32.6 million. But payments to suppliers and employees have increased just as much as the cash receipts. So this company has not did not experience any scalability or did not show any operating leverage during the past year. And that meant the company was not as cash flow positive as the previous year. In fact, they went backwards from being operational cash flow positive 2.9 million to 1.9 million. Now, they were still operational cash flow positive, but when you look at cash flow in investing activities and financing activities, particularly investing activities, they did spend $5.5 million in that because of acquisitions, and they also borrowed $3 million, which raised the money on hand. And at the end of the quarter, they had end of the year, they had $4.2 million in their bank account. One thing I wanted to find in regards to Cosol was with the breakdown in revenue by service, sector, and geography. I'd also like to know the particular margins within each of their verticals. And fortunately, Cosol did provide this information in one of their presentations. They broke down revenue by service, revenue by sector, and revenue by geography. The only thing I didn't find out was the particular margins within each of their verticals, which I do think is quite important, because if one of their verticals or one of their segments has significantly higher margins than the other two, then maybe they should spend more time on growing that vertical over the other two. But when we look at revenue by service, fairly evenly split, 35% to 35% to 30%. The smallest of the three verticals is the support and managed services. When you look at the revenue by sector, mining is their biggest client base with 40%. Next comes utilities with 24%, defense with 23%, and public infrastructure with 13%. And revenue by geography, Asia Pacific is by far the largest area at 80%, and they're starting to grow in North America, and that accounts for 20% of their revenue. One of the reasons I decided to take a look at Cosol was because they had their AGM, annual general meeting, on the 18th of November. I am recording this video on the 19th of November. And one of the things I like about AGMs is sometimes management will give some guidance for the rest of the financial year. And Cosol did give us that in regards to revenue for the first half and also EBIT margins. Now, we know EBIT margins were about 16.4% for the financial year 21, and revenue was around, 33 million, and their forecast for half year revenue is between 20 and 22 million. So that means revenue will be growing, just looking at the first year numbers, and EBIT margins around 16%, or at least 16%, which means that's roughly the same as we saw in the previous financial year. They also gave some of the clients they have won during the first half of this financial year, and it's just added to the very impressive client list this company has. So some of the clients they did win include Glencore, Urban Utilities, Queensland Government, and Prony Resources, which I've never heard of, and Anglo American. That's all I have for this introductory video to Cosol. And one of the whole points of me doing these videos is to share ideas. And if there's just one viewer who takes this idea, does more research on this company, and potentially takes a position in this company, and then this company becomes a 10-bagger, then I think I've made it worthwhile doing this video. And if not, I've learned a little bit more about this company, and maybe I will myself do more research on this more growing, and profitable company. If you have any questions about this company, or you know way more than I do in regards to Cosol, I'd love to hear your thoughts. So leave it in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Talk to you later. Bye.